In this video, we're going to try to figure out if Joe Biden just killed real estate. So make sure you stick around for this one. What am I talking about? I am talking the recently released American Family Plan that the White House just published on their website. And I think it's a good plan in a way because it is providing really a renewal of the human infrastructure, which is good. So this is providing childcare, this is providing more education, more funding towards education, and helping families do better. So that's the good part of the program. The problem, as usual, comes when we're talking about how we're going to pay for this program, and this is where it is a little bit difficult. And of course, in order to pay for this, they want to increase a whole bunch of new taxes, basically taxing the rich, people that are doing a little bit better than others, and then trying to help the working class, the middle class, and the lower middle class. What I'm going to focus on in this particular video is 3 taxes that really affect real estate or real estate investors, and see if this is really something that we should be worried about. And my point of view on this is that real estate investing is really the last investment vehicle for the working class to really achieve financial freedom and leave a legacy for their children. I think that destroying real estate investing or making it more difficult for the working class to invest in real estate, I think it's extremely detrimental for their children and for achieving financial freedom and retirement. The stock market is not going to do that. The 401k is not going to do that. And starting a business is going to take a lot of time, and often families, the children are not interested in taking over the family business. You know, we've heard of all these family restaurants where they're trying to pass it on to their children, and the children are not interested in running a restaurant. They want to do something else. So this is a real problem. Real estate investing in passive income is an ideal way to provide a legacy for your children and get them started, give them a kickstart for their future. So I want to point out that the American Family Plan is just that. It's just a plan that was released by the White House. This is not a bill yet, so it needs to be written up. It needs to be discussed in Congress. It needs to be passed by Congress. So there's quite a few modifications that could be done, and so we'll see about that. And I think there's going to be, we already know that some of the Democrats had some issues with some of these taxes, because they know that these taxes are affecting middle class working families, and they want to make sure that to try to blunt the severeness of these taxes. So again, let's talk about these 3 taxes that really are affecting real estate, and then I'm going to try to discuss kind of how and if it will kill or affect real estate. So the first one is about raising the capital gains tax basically to the ordinary income tax level for household making over $1 million. Currently, the long-term capital gains tax, the highest level, is 20%. So that would apply still if you make less than $1 million. But if you make more than $1 million, I'm not sure exactly how the details are going to work, if there's going to be some kind of proration. But if you make over $1 million, then the long-term capital gain tax will be 39.6%, basically your ordinary income tax. So will this tax increase actually kill real estate? And again, I want you to put yourself in the shoes of someone who is making, a household who is making $1 million a year. They have this apartment building that they want to sell, and now they're thinking, you're going to have to pay 39.6% in capital gains tax for when you sell this building. So you're going to think twice about selling this building. You might decide that I'm just going to wait for another party to be in power, for the law to be changed in order to do this. Also, if you're making $1 million a year, chances are you have tax lawyers that are part of your team that are helping you figure out different methods for basically avoiding this particular tax. For example, I mean, you would be able to maybe look at opportunity zone. Maybe you would be able to look at creating an endowment plan and then donating your building to this endowment plan and then being able to invest with that instead. So there's a number of different methods that I know, and I'm sure that if you have good tax lawyers, I think they have way more ideas for helping these people, these families that are making over $1 million a year, avoid these kind of particular pitfall. So again, what's going to happen is that it's either going to delay their sale of apartment buildings, so it's going to reduce the supply of real estate on the market, and when you reduce supply, chances are the price is going to go up on these particular asset class. The second one is about repealing the 1031 exchange. So this has been around for a very long time, and initially the Democrats' plan, or Joe Biden's plan, was to completely remove that 1031 exchange. But after some Democrats really kind of like had some I would say concern that it would really negatively affect some of the middle class and working class people on achieving financial freedom, on retirement and all of that, and building a legacy for their children. They decided to basically continue to have the 1031 exchange for up to $500,000 in capital gains. Above that, then you would pay the 39.6% in capital gains. In my opinion, this 1031 exchange is critical for wealth building and also kind of generating multi-generational wealth. I think this is very, very important, and it allows people also to kind of like move up to a higher level property in order to achieve better cash flow and being able to retire. And again, put yourself in the shoes of an investor who has an apartment building that has $1 million, let's say, in capital gains. So you would think twice again about selling that building. What kind of building would that be? That would probably be an apartment building that would have that kind of significant capital gains. So you would probably say, well, I'm just going to wait. I'm going to delay the sale of this apartment building until the law change or something like that, or we're going to figure something out to avoid that particular capital gains tax. Again, reducing the supply, increasing the price on the market for these apartment buildings. If you are thinking of investing in multifamily, let's say you're a value add kind of multifamily investor, again, you're going to think twice about this. That might change your strategy, because you're going to say, well, if I'm going to go and buy this property and I intend to basically make $1 million in capital gains when I resell the property 2 or 3 or 4 years down the road, then now I have to pay a huge amount of taxes when I sell the property, because I can't do the full 1031 exchange after that. So I'm going to think twice about doing this. And then I might change kind of my approach on how to do real estate. Instead of going into multifamily and more expensive building, I might decide to go to single family rentals, where I can basically do the smaller capital gains exemption below 500K. I can bundle them all kinds of different ways and then move them to other kind of other types of asset that I want to have long term, hoping that that 1031 exchange would be back online a little bit later. So this could be a very good strategy. Again, so that would reduce the demand on the multifamily, because people wouldn't be interested in doing that anymore, but that would increase the demand on the single family rental, therefore increasing the price on the single family rental side. This would be detrimental for a lot of people. also for people who are trying to build their single-family rental portfolio and achieve financial freedom, because now they're going to have to pay more for their rental properties. The other thing too is that if people want to buy a home, it's also going to cost them more, because now these single-family rentals is going to raise all the values of the rental properties or any single family in that particular neighborhood. So that's kind of like the impact that it will have, I believe, on the single family. So I'm expecting an increase in price if this becomes law. The third one is the elimination of the stepped up basis. So this is a critical part also of multi-generational wealth building, passing your legacy or creating a legacy for your children, because basically this stepped up basis, when we're looking at calculating capital gains, what happens is that we're looking at the basis, the cost, the initial cost of that building minus depreciation, and then we're looking at the value of that property or that asset upon death. That difference there is the capital gains. On the stepped up basis, what happens is that basis is automatically moved up to the market value, and if your children decide to sell that property or that asset upon your death, they will pay $0 in capital gains tax. So this was a great way to pass on and build multi-generational wealth, and then pass on a legacy for your children, so they don't start from ground zero every time. So imagine that your parents owned a house in California and they bought that house 40 years ago for $300,000. And the cost basis, let's just say the cost basis for that house remained at $300,000. But now if you sell this house, if you've lived in California, this house is now worth $2 million. With the stepped up basis, basically the value, the basis of that particular property, that particular house would be $2 million, and you would pay nothing on capital gains tax. Under the new Biden plan, the first $1 million would be exempt basically from the capital gains. So on the $2 million, the basis is $300,000, so you would have a gain of $1.7 million. $1 million would be exempt. So upon my death, or the death of your parents, I should say, you would pay taxes on the $700,000. And as we discussed earlier, the new rate for that capital gains would be 39.6%. So 40% basically of $700,000, close to $300,000 in taxes that you would have to pay compared to zero today. And you would have to pay that upon the death of your parents. So who will be affected by this? I think I have a little bit of a cynical view. I think the people, the super wealthy, they have tax lawyers and they're going to figure out a way out of this so that they don't have to pay taxes. They're going to figure out some kind of structure, some kind of way to put this money away somewhere owned by corporations, and then their kids will not have to pay for the taxes and still control the equity. Who's going to pay for this is going to be, again, the middle class who doesn't have the resources to pay hire very expensive tax lawyers to figure out how to get out of this particular tax. And also, it may not be worth it to figure out, to implement a strategy to avoid this particular tax. So will the Biden American Family Plan destroy real estate? Well, of course not. It's not going to destroy real estate or real estate investing. As usual, investors and entrepreneurs are very resourceful. They adapt and they just want to know what the rules are, and they're going to play by the rule. We all need real estate. Real estate is still going to be a very strong investment. I think it's just going to be a shift in the strategies and how it is implemented, and maybe the type of asset that are being invested that will change dramatically. I expect that a lot of the impact of this is going to be an increase in prices in the smaller kind of real estate rental income, like single family rental, 4plex, maybe up to 8plex in some markets. So I would say I wouldn't be surprised if that would fuel again an increase in prices in the income producing real estate. I hope you find this video helpful, interesting, and insightful. Make sure you click the like button because that way the YouTube algorithm can actually distribute my video to a broader audience, which I think they will benefit from. If you are interested in anything about real estate, investing, passive income, financial freedom, and obviously today, legacy for your children, make sure you watch the rest of my video on the channel. Make sure to subscribe and click the little bell to make sure you get notified whenever a new video is published. Thank you.